I want to bring in Hennion and Walsh management there, President, CIO Kevin Mahn. Kevin, so history suggests that these V-shaped rallies, that they have a lot more room to the upside. We can see some of the more recent ones, the 30-day bounce. We can also see the 12-month return, monster returns, 37%, 75%, 41%, 36%, 22%. Is it unreasonable to expect history to repeat itself?
No, it's not unreasonable. And since the strait was open, the spring was sprung. And consider the historic nature of this particular recovery. Going back to 1928, Charles, this was the only time that the S&P 500 hit a new high within 11 days of retreating by 5 or 10%. So investors would be wise not to try and time the market going forward, because there will be more volatility, but rather stay invested in the market and look to those themes in the market that were resonating even prior to that.
Let's bring that up because you say that the thematic stuff, the things that were working probably will come back again this year. As the dust settles, right?
Yes.
And what are some of those themes?
So I think you just need to follow the money. Where was all the money being spent last year prior to this conflict, and where will it likely be spent for the balance of this decade? It's places like AI infrastructure, power, memory, aerospace and defense, and of course, healthcare.
I see a lot of people who've missed this rally, and they kind of talk about the power thing, these bottlenecks being short-lived. Well, don't chase them. You know, it's only going to be like they're going to resolve this stuff overnight, yes. Or the AI infrastructure spending is going to all of a sudden fade away.
Mm-hmm. Think about utility companies. Do utility companies just go away if the AI revolution stops? No. So look at a company like NextEra Energy. They have a yield above 2%. They own and operate Florida Power and Light with 2 nuclear sites, and they're powering the AI revolution. So they're going to continue to provide value going forward, plus income potential.
All right, I talked about earnings revisions a moment ago. Earnings picking up this week. This is a really part of the earnings revision. So earnings revision really coming from 2 areas.
Yes. Information
technology, which is 65% contribution to the S&P, and energy, 47%. But within information tech, Micron.
Wow.
Micron is 51% of the overall S&P 500 earnings revision. And you've been long Micron. You still like it?
I still love it. There's an insatiable demand for memory as it relates to the semiconductors and chip space right now. Look to their last earnings report. They can't keep pace with their current orders. And if you look at their forward-looking earnings, they're only trading about 8 times forward earnings. That's really attractive.
It really is nuts, because I know people want to hate, but it's hard. Like, even if you're traditionalists, it's hard for you to hate it. And of course, I keep reading more and more. I see that you got another deal with NVIDIA, with the HBMs, and almost every day I see another positive report on this. Let's talk about an area that I like that's coming on really strong, this industrial space, really. And here's one chart that I think is really important. Manufacturing capacity, 17 quarters of contraction, 16 quarters of expansion, acceleration. We saw Philly Fed last week. We saw the ISM numbers this year. This is really pretty good. I mean, this to me seems like an investment theme, something you can invest in.
Yeah, and industrials are one of the top performing sectors year to date. I like to lean into the AI infrastructure side of the industrial play. A company like Sterling Infrastructure, which was long known for building out e-commerce capabilities, warehouses, distribution centers, but now they're also building.
So we have the chart of it right here, Sterling Infrastructure. It's made a nice move. It's been basing here for a moment, but really on the cusp of another major breakout. Something like this, how far do you think it could go?
I mean, up 44% year to date, over 200% over the last year. How much higher could it go? But it's only trading at roughly 35 times forward earnings, so not cheap, but not overly expensive either.
Let's talk about a couple other picks that you have here. We're going to bring them up here on the screen for a moment. So NextEra Energy, you just kind of referenced that.
Yes.
Kratos, this is one of these names that it feels like, more and more folks have learned about it in the last couple of years. This pharma name is one I'm not familiar with.
So Apellis Pharmaceutical was recently acquired by Biogen, the same Biogen that acquired Reata Pharmaceuticals back in 2023. They're focused on immunologies and also on treating rare kidney diseases. And this is just the precipice of more small cap biotech M&A activity coming.
Yeah, we've got this thing, they call it the patent crisis. All these big companies, they've milked us for everything they could on these drugs, and now they have nothing in the pipeline. So they're forced right now to make a lot of acquisitions.
Absolutely, and they don't have a pipeline to turn to.
Right.
So as Congress continues to push them to lower drug prices, and as more and more of their drugs come off patent, they're going to have to be acquisitive, and Apellis was a benefactor of it.
Good stuff. APLS for those listening on the radio. Kevin, good stuff.
Thank you, Charles.